Facts.
And the dollar has ripped ever since. Facts, not opinions. And how have stocks done since February of 2021? They have not done very well.
What's up, everybody? Jay Fielder here. Just want to give a quick flash update on why stocks and crypto are moving lower. I think there's really two primary things going on. The dollar is moving higher, and bond yields, aka interest rates, are also moving higher. So I want to kind of get into what's pushing the dollar higher, how much higher can it go, what's pushing bond yields higher, how much higher can bond yields go. So let's get into it.
What happened after the Trump election, right? The dollar peaked and started to fall. And what happened in 2017? One of the greatest years in the history of the stock market, early 2018, dollar bottoms. And what happens to stocks and crypto around the world? They stop going up, not just in the United States, but globally.
If there's one thing I want you to understand is that the dollar is the ultimate risk-off asset. So I want you to see how the dollar runs counter to risk assets and also economic growth. At the bottom, you have business activity in orange, in black is the bond market, in red is the stock market, and in green is the dollar. Now I'm going to cover up the chart to highlight the peak in business activity. Next, bonds sell off, stocks sell off, but the dollar surges. Why? Because the dollar is the ultimate risk-off asset. Now think about it. When people are selling their stocks, bonds, real estate, what are they doing? They're creating demand for the dollar. They're selling their assets into dollars. August 19th, the dollar broke resistance and went back to the highs. Now it just so happens on the same day the dollar breaks out, the stock market gets crushed. Bitcoin gets crushed. Ethereum gets crushed. Quite simply, a strong dollar pushes down stocks and crypto. Now the dollar's starting to break again and it has a lot of room to run. What does that mean for stocks and crypto? Okay, now that you have a better understanding of the relationship between the dollar, stocks, and crypto, what do you think is going to happen next? Now, the dollar's had a nice run to the upside, mostly driven by inflation fears and now economic collapse. And a lot of that is driven by Fed quantitative tightening, meaning they are increasing interest rates and they are sucking money out of the system. That causes people to panic, sell their stocks, sell their bonds, sell their real estate, sell whatever they have to, and go into dollars. So the dollar will keep surging until the Fed pauses, until the Fed pivots. Now, what is the sign that the Fed will pivot? Well, housing is rolling over, gas prices are falling, oil is about to crack, and I think the last thing that the Fed needs to see is employment to go down the hole, for wages and payrolls to get destroyed. Now yeah, wages and payrolls are starting to fall, but the Fed won't pivot until the unemployment rate starts to rise. And as of Friday, September 2nd, that's what we're starting to see. In 2001, unemployment rose and the Fed cut rates. In 2008, unemployment rose and the Fed cut rates. In 2020, unemployment rose and the Fed cut rates. So what you really got to ask yourself is, at what level of unemployment will the Fed pivot? Now let's look at a chart that shows you the history of when the Fed cuts rates and how the dollar peaks out. Now this is the Fed funds rate in white versus the dollar, and about 9 times out of 10, when the Fed cuts rates, the dollar sells off. Now you might ask yourself, why would the dollar sell off when the Fed cuts rates? Well, think about it. When the Fed tightens rates, when they increase rates, they're restricting growth in the economy, and investors hoard dollars. They hoard into dollars because dollars are the ultimate safe haven. Now, when they become accommodative and they start cutting rates or making money cheaper and actually putting money into the market, now all the investors go risk on and they start putting that cash and all those dollars back into stocks, crypto, bonds, whatever else real estate they want to get into. And that's why when the Fed pivots, the dollar will pause and then sell off. Okay, enough about the dollar. Let's talk about bond yields. Now, instead of getting all complicated and explaining what bond yields are, just understand this. Bond yields are the actual variable interest rate. The Fed funds rate is one set rate for banks, but the bond yields, or the interest rates for the market, go from 1 day all the way through to 30 years. So interest rates only look at two things, growth and inflation, right? If inflation gets too hot, bond yields explode. So lately what we've had is bond yields moving up because of inflation. Even though growth is getting crushed and growth is rolling over, GDP is rolling over, housing, employment, whatever, we already talked about that. But bond yields have not rolled over yet. Now what's going on here? Why are interest rates still high? Is it natural gas? It's not oil. Oil's dropping. Now bond yields will probably roll over before the dollar does. Why? Because as the data comes in, as employment drops, as growth, or we go into a deeper recession, bond yields have to respond. They're just waiting for inflation to be confirmed as dead. Same thing with the Fed, and that's all we're looking at here. Are bond yields going to roll over? When inflation is dead, the Fed can pause, and around that time, you get the dollar starting to pause, and you get interest rates starting to roll over. Now let's look at a chart that shows when the Fed cuts rates, what bond yields usually do. All the red shades represent the Fed cutting rates, and as you can see, interest rates start to follow. In blue, you have the Fed hiking rates and interest rates going up. Currently, the Fed's raising rates and bond yields remain elevated. But the real question is, how far will they go? When will they pause? When will they cut rates? Now look, I know I did a lot of ranting, but I just want it to be clear that the dollar and interest rates moving up are pushing down crypto and stocks. Now when the Fed keeps increasing rates, it's going to push down stocks and crypto. But when those three things turn, when you get the dollar roll over, when you get interest rates roll over, when you get the Fed cutting rates, it's going to be too late to start getting in. So now is the time. We're close to the bottom. The data, the economic data is starting to roll over. It's getting ugly. When it gets ugly, the Fed gets close to cutting rates. You're going to see it somewhere. It's either the dollar is going to start peaking out, it's going to be interest rates that start peaking out and rolling over, and then the Fed cuts rates. But don't wait. It's going to be too late. Ethereum, 10,000. Bitcoin, 100,000. Tesla, 2,500.
The dollar peaked and stopped going up and started to collapse. And what happened when the dollar collapsed after March of 2020? It was the greatest 52-week period in the history of the stock market ever. Like greatest period ever for the stock market.